and go.
Hello, Warriors. We have a great way to cap off the year. I was just telling Tavi, it's like popping open the champagne bottle to be with Tavi today. Tavi, thank you very much for coming back to TradeGateHub.com. Great to have you at the end of the year.
Thanks for having me. Looking forward to this, Coach.
All right, buddy. So, we have to be a little reflective before we head into the next chapter of our trading lives. And I'm curious, what was your biggest takeaway from 2022?
Well, I think a lot of things were big takeaways. I think we came into the year with positioning a little heavy on commodities, even though I love the thesis. I think the dollar strength was perhaps a big takeaway as well, which is right in line with this weakness in commodity markets that we've had. Even, despite all the Russian invasion in Ukraine and so forth, you would expect the commodities would have done a lot better. So the big takeaway, it's been the strength of the dollar. I think the 10-year yields, perhaps surprised a lot of people. To me, it wasn't so surprising in terms of that. I was very much in line with that view. And precious metals, I thought perhaps given the fact that the Fed has done so much in terms of fighting inflation, perhaps we would have seen a little more weakness on precious metals, but the accumulation of the metal throughout the year has been pretty large. So we've had some really large breaks in correlations, and you look at gold relative to global bonds, and you look at gold relative to tips, or even relative to stuff like the Japanese yen, which is, I'm old enough to remember when that was the safest currency in the planet. So I think all those things are setting up. And finally, my final thought has to do with the yield curve inversions. And I don't know when was the first time we talked, but I created this indicator back in 2018, I believe, which calculates the percentage of yield curve inversions in the U.S. Treasury curve, and it really is across any other economy as well. And every time we go above 70% handle in the U.S., a recession follows, and not only that, but it's a time to do that ratio again of buying gold and selling stocks. And I don't know. I mean, it's been a month in, and this trade is already working. And usually, it's a phenomenal trade for 2 years, or in average. Sometimes it's just a year, sometimes it's 2 years. And usually, the times when it works very well are times when you have this historically depressed levels of commodities to equity ratios too. So, I think this is to me coming up to 2023. It continues to strengthen that view, and we're seeing some of that unfolding on equity markets. I think there's more to go, but I think the precious metals look more and more attractive.
Okay, Tavi, lost your video. So all year long you were very constructive on the gold, and people said, well, gold really did do its job even before the late year-end rally, because it was only down 10% compared to other asset classes like equities and bonds, which were down 25 and 50% on certain coupons. And now I believe gold's going to end up positive on the year. And so this may have been just the kickoff, the way you see it. And I actually saw a comparison chart. I'm wondering if you do it. Tavi, if you do it, and that's on the XLF, the banks against gold, which I think is even more significant than stocks, because the banks are a story of credit, could be, and the gold is also a story not as much about inflation, but more of a monetary hedge, and perhaps that's why it didn't get going till the dollar peaked. What's your take on what's happening in the bond market still, even though we had a nice little rally? TLT has pulled back quite a bit, and some of the high yielders aren't acting great. Do you think with what's happening in Japan making a change because their JGB market was dysfunctional, and the BOE had to come in because their gilt market was dysfunctional, that the same thing could happen here in the US with our bond market?
I think ultimately we're going there. I'm not sure it's going to be as early as we're seeing with the BOE and the BOJ as far as, sort of yield curve control levels, even though we're kind of different phases in Japan. We're seeing, to me, what was very telling, we're short the JGBs. And the reason for that was looking at the differential of 30-year yields versus 10-year yields in Japan. 10-year yields were not reflecting the true volatility in the bond market. And when you looked at that prior to this break of the 10-year yield peg to from the 50 basis points, I think that was very telling. We're still short that, and I think we add on a short on the Japanese yen, a high conviction short. Look, I think what's going on here is what we call the trifecta of macro imbalances, and I've been talking about this because I think this is going to be the theme for the next 5 to 10 years. Is we've never seen a time. We've seen times when we had large levels of leverage, large levels of speculative environment, but also a inflationary problem, but not all at once. And this is,
it's like the perfect storm, isn't it?
It's a perfect storm, but it really constrains most policymakers to fight inflation as a whole. And look, I'm in the camp of inflation. We are entering an inflationary decade. I think we're going to go through a period where inflation is decelerating. It's undeniable to look at the chart of inflation over the last months, especially. Now, the real question is this just the first wave, and we're going to go back to another issue? And I really think that that's going to be the case. The pillars.
Yeah, well, in the 70s, Tavi, it happened 4 times where we thought we had inflation licked, and then had to go back onto tightening cycle. So this would just be our first pause. Should we pause up around the terminal rate? And perhaps you think the Fed may have to go back to work and start chopping wood mid-year next year when they realize. Go ahead.
Yeah, I don't think this job is done at all. I agree with you. Yeah. I don't think this job is done at all. But look, what's going to happen is I think we're going to go from, I think it's too early to say next year, but maybe 2024 will be a theme. The second wave of inflation, to your point, is the one that is stronger than the very first one. And so if we went very close to double digits this time, I think we're going to go to double digits next time. The things that have not been resolved are really the wages and salaries growth. I mean, that's a secular trend. The commodity shortages in terms of the underinvestments in commodity space, I mean, that has not been fixed. You look at the aggregate capex for any part of the commodity space or the industries in natural resources, they're all still very historically depressed. Number 3, the reckless amount of fiscal spending. I mean, for sakes, we recently just passed on, not too long ago, an inflation act. Back in the 70s, there was somewhat of a general sense of fiscal stimulus and inflation. Nowadays, I'm not sure that that's the case. So we're going to go through a lesson there for most policymakers. And number 4, which I think it's going to be a big deal, is this deglobalization trend that I'm not sure is at its late stages, is in my view at early stages. And if that's the case, us going back to reshaping the manufacturing plants of developed economies.
That takes 10 years.
Just like China did.
Yeah.
I mean, remember China in 2001 and unleashed a bull market for commodities? Imagine if I tell you that G7 economies are all going to have to do that. So, I think that that's a long-term trend, and that's why I'm bullish on Brazil. It all ties back to the Brazilian trade as well. Which I think
I think you're just subjective about that Brazilian call there, Tavi.
Very unbiased.
I wouldn't say that if you were from Argentina, but anyway, I do look at the real, and the real, if you want to start getting into currencies, held up very well during that last phase of dollar strength.
Yes.
Some of the emerging market currencies like the peso and the real were not getting crushed, while things like the euro and cable were G7 currencies. So you think this could be a long-lasting trend?
Oh, I do. I mean, back in early 2000s, after the tech bust, I mean, I'm not going to say Brazil did not get caught up during the tech
Yeah.
bust. It did. But it, like you said, it performed better than other things. And that was so telling at that time because in 2003, 2002, it unleashed a bull market for the Ibovespa in dollar terms that went up close to 18-fold. While the S&P was basically flat during the same time. Now, if you compare that with the last 10 years, or since the global financial crisis, I should mention, the Brazilian index has been basically flat, while the U.S. Index was up close to 6 to 7-fold during the same period. So, I think we're going to flip that, and we've been adding to that position over time. And there's one section of growth stocks that we are.
You like Petrobras?
Well, Petrobras, I do like Petrobras, but I'm a little concerned about the state ownership aspect of it. But it's a good company. I mean, they own one of the best acreage in oil and one of the best quality oils you can find in the world. And so, it's hard not to like it in terms of the assets. I mean, it's not the most efficient company whatsoever. I mean, that's the risk and why it's trading at such a discount. It's not just it is cheap for because folks are because the market is so inefficient. No, it has to do as well with the inefficiency in the company itself. However, I do think there's plenty other companies in the space that you should own, and I do own Petrobras, but I own Gerdau. It's a steel producer that should certainly benefit from all those trends we were referring to about manufacturing. I mean, back in the 60s and 50s, manufacturing was close to 30% of GDP in the US. It is now close to 10%. So, we go back to, I remember 3 years ago, Coach, I stumbled into, maybe 4 years ago, creating those CapEx charts of natural resources. It blew my mind. I was like, wow, this is the time to be bullish on commodities. Well, I think now the next chart that I can refer to that is as critical as it was the CapEx chart 3 years ago, it has to do with the manufacturing relative to overall GDP of the G7 economies. And so that's going to be a big part of it. Now, Brazil in general,
it's shrinking in developed markets.
Oh,
the
yeah.
Percentage, yes. For a while.
Yes, for 40 years, 50 years, depending on the country. The US is basically 50 years of a decline.
Wow.
So yeah, I mean, it's back in the 50s used to be like I said, about 28% of GDP. So I really think that's going to be a big change in logistics as a whole. And I can't, and the other thing is we talk about emerging markets. Emerging markets have this sort of a block view, right? We talk about emerging markets and we think about China, Russia, Brazil, India, and so forth. But we're going to have to break those through because the fact that we have commodity exporters and commodity importers and geopolitical masses versus geopolitical neutral countries, we're going to have to break it through. So you got China, a country that, in my view, continues to show problems in terms of being a commodity importer and also a geopolitical mass. You got Russia, which is a commodity exporter, but it also creates a lot of tensions geopolitically. It's hard to see countries, creating long-term relationships with Russia. And then you have Brazil, which does have almost exposure to any commodity you can think of, from water to agricultural commodity, energy, mining, lithium.
And you know what? I'm looking at this Real chart, and I pulled up a long-term chart. I pulled up the monthly on the Real. And if we take out 4.5, the Real's going to 3. That's a huge tailwind for any Brazilian investment, isn't it? Strength in the Real, especially around, among producers of grain or metals or energy, anything. You get the appreciation of their underlying business plus the currency tailwind.
Yeah, I mean, do a chart. You're going to see now you're looking at the Real versus the dollar. Now let's do the Real versus the Japanese yen, or the Real versus the Chinese currency. So in other words, a commodity exporter versus a commodity importer. I love those trades. I think that those are, long-term, really, really interesting ways of expressing that view of countries they may benefit from the current macro setup relative to others that are going to be in a very unfavorable stage here very soon. So if you look at that chart, especially in the long term, it's been a long-term decline and now trying to bottom. So it would be BRLJPY, perhaps you can do it. There we go. Interesting. It's an interesting chart. Let's see when it shows up.
A nice bottom.
Yeah, I mean, I like that a lot. Relative to the Chinese yuan is also one of my favorite charts. We are short the Chinese currency. I'm not long the real. I'm long Brazilian equities. However, you know, ultimately, I'm also long the real and those ideas. But yeah, you know, commodity exporters in Brazil, I think, will do very well. The economy is usually linked to commodities. If you look at the valuation of Brazilian equities relative to VCNY in that case, if you looked at that relative to U.S. equities multiples, and you look at the differential of free cash flow yield, the last time we've seen, you know, this cheapness around and undervalue multiples in the Brazilian names was really at the bottom for all the way back to 2 to 3 decades that I have data for. So,
wow,
you know, it makes me believe that, you know, we're close to an inflection point for the whole place. And, you know, what a time for that to happen, because we just had a political shift that is very negative in my view.
right.
And so it's so hidden that I think it makes it perfect. It's extremely
It's a contrarian
unpopular.
trade because people will probably want to avoid Brazil right now
Well,
for those reasons.
yes, I think, you know, I speak with Brazilians quite a lot. I can't find one who's bullish on it. So it's
Okay.
usually a good sign.
It really is. I got when your friends call you and ask how they could invest in Brazil, you'll know it's time to book something, right?
Well,
So,
you know,
go ahead.
here's a funny story. Sorry, coach. But
Yes,
one time somebody came up to me and said, a Brazilian guy, I would love to invest with you. And, you know, and I said, look, I'm actually investing in Brazil right now. Not so much. I'm probably going to do my own thing for the next couple of years and we'll talk later.
what a great way to blow you know, yeah. All right. Well, you know, I'm like that too. I don't like having too much company on my stuff. You know, we went through this year and it was a regime change with tightening and no more free money. Biggest lesson for you, Tavi, this year? You know, I say to people that you're either learning, growing, or you're dying. And I don't care how many years you've been in the business. Every year we learn something else and grow and put it in our book so that we know how to react next time we face situations like this. What was your biggest lesson?
I think I came into the year not believing as much that the Fed would do what they did. And this
Okay,
was a big lesson for me. I thought that the Fed would hike rates, but you think about a year and a half ago, and I'll tell you that the Fed would be raising rates as much as they did. I don't think a lot of people would have said that that would be possible, especially given
right.
the fact of where, you know, valuations were, where the debt problem is. And so to me, I underestimated a lot of that move. And, you know, I think it was partially given the fact that I was very much aware of the imbalances that could have been created when you have rates going higher. And another lesson that I don't want to miss here, which is maybe even more important, is there's one thing when you raise rates from 0 to 4%. While this sounds a lot in a rate of change basis, which I think is the right way to measure things in the macro world, it may not be the right thing here. And so the rate of change has been drastic in terms of the rate
velocity.
hikes.
Yeah.
But the other thing is when you get from this 4 to 6% range, and this is when you start seeing, you know, sort of those credit events and frauds being revealed. And I think we're in that range right now where we're going to see some of those. I'm a little, you know, this is my 1 to 2 quarters view. Now, I'm going to sound a little crazy here, but the very first week of the year, I'm a little concerned that we may see a total, you know, whipsaw move in terms of Yeah, I'm very pessimistic about equity markets. However, the rebalancing that we may see at the very beginning of the year may cause a movement that may confuse a lot of people. So I'm expecting that. The way I hedge that is I'm looking for a little bit of long exposure that I feel comfortable owning, and that's biotechs.
Okay.
No, the XBI has been acting
Yep.
very well.
It has.
Yeah.
They've been the stars.
So
Okay.
yeah.
All right. So you're looking for what everyone has already given up on, the seasonal strength that never came during the season will emerge at the beginning of the year. For what? Like, are you talking a quarter? Are you talking about a few weeks? What's your view on
No.
longevity of that?
This is a trade slash way of hedging my portfolio. I'm short, okay, my biggest short right now is Apple. And it's been
Okay.
for the last months, it's been increasing, and that's just because I think it's the last shoe to drop. I look at many
Yeah.
things, and I posted a chart yesterday of Amazon at its March lows already of 2020. Apple remains, with a 58% downside from here if we're going to go to the same levels.
What do you think we're going to 90? Because I've been pounding the table on this short from 140. And do you think there's a possibility that we take it down towards the COVID highs? That was $80. A lot of people looking for just maybe about 110.
So to me, there's a roadmap here that it's going to sound crazy. I think I'm more bearish than you on this, but
40?
I think we're going to go to the 60 range or so, 60
Okay.
to 50. And the reason for
Wow.
this is I look at other things like, look at Amazon, for instance. It's already at its March lows.
Yeah,
You look
they
at,
all are.
ARK Investments is there. Meta is already there. Netflix
Yeah.
is already there.
Yeah.
Google is going there. It's not too far from it either. I think Nvidia is going to go there. Microsoft is another interesting one that's likely to go there. But there's a list of things that I think are already, look at software stocks. I mean, majority
Yeah.
of them are already there. So
Yeah, the semiconductors. I have a question for you then, Tavi, because here's my lesson. I never would have believed that we would have gone through a bear market like we did, although it was seesaw, and that the VIX would be at 20, basically, while the market is 25% off its highs. I couldn't imagine it.
yeah.
I think it has, if what you're talking about is going to happen here, everyone now is so discouraged with being long volatility, and all the short volatility guys have been making money. Do you think that the VIX is set up for an explosion, or
I
that
do.
it's still gonna do nothing, like it has throughout this whole year of really a lot of decimated instruments? How did this happen that the VIX went nowhere?
Yeah, it's a very good question, and I'll add to it as well, which is right in line with also my lesson for the year too, which was credit spreads. I mean, if I can think of one side of the economy that was more fragile than anything else, was corporate bonds, especially junk
Yeah,
bonds, and I would expect that without the Fed stepping in and doing anything to prop up liquidity, it would have been decimated too, and we would have seen a credit event somehow, and we haven't seen that. So I'm with you. I don't fully, there are things in markets which surprise. I'm with you. I mean, when was the last time Nasdaq was down 35%, and you have credit spreads being sub 2%, right, relative to treasury yields? And to me, it blows my mind. So you have, well, the answer for it is, I think markets have priced in a duration risk, but it hasn't really priced a true contraction of fundamentals of cash flows and so forth, which I think it's coming. The first quarter and second quarter, I think will be different than the prior quarters in terms of release of earnings. And if that's the case, markets needs to adjust for that. But so just going back to one thing that I don't want to miss, that the XBI idea is a total trade short term but I
Right.
think will be just like the Brazilian idea. I can see becoming a larger portion of our portfolio in the next call it 1 or 3 years. So the same way I went to I think was very successful in our fund as far as looking for an expert to help us really build a portfolio in the metals and mining. I did the same with oil. I am looking for that person in the biotech space as well, because I think it's time for really increasing your learning curve in the next couple months here. So yeah, our fund had a good year so far. So
I wanted to show your complete transparency here, and I'm a fan. You are part of my intelligence gathering. I go to your Twitter stream to check things out, see what your comments are. And Tavi, you've really helped edify the communities that I host. And, I want to wish you and Prescott and your family a happy new year. And this was, I think we covered a lot of things, and the takeaway is some rebalancing, but we're going to pay the piper and stop looking at only the US, start looking at Latin America. Anything else besides Brazil you like out there in the emerging markets? Brazil's your number one pick because you're objective about your homeland.
Well, I like metals and mining in general.
Yeah,
still, and I think that's going to be still an important trade. And some focus on that side of it. I think that's a secular movement as well.
And the yen short, you have targets like around 120 or 110, or what are you looking for on your US dollar yen short?
I don't really have a level. I guess it's because the reason for that one not having a target is because it's also conditioned in my other short in JGBs. So I'm just doing the two trades all at once. I'm short both. If the JGBs work very well, and I'm probably going to clock out of the JGBs and increase my Japanese yen. If the Japanese yen works very well, I'm probably going to clock out that and work on my JGB short a little higher. So that's sort of the plan. And I like the way the Japanese yen moved right when that news came out, and I saw the Japanese yen rallying. I immediately thought, wow, this is a great time for me, who's also short JGBs. I probably should add that trade right now. So I did that immediately. Look, I don't have a crystal ball, coach. I wish I did, but I think there's ultimately more pain for it's just hard to be structurally long the dollar right now, just because of how much it has moved in the last 12 months or so. But this movement that we've seen recently, it's been very severe.
10, 12 big figures in a month, and now sideways.
Well, and just to add a little complexity here, which is something I don't have a view on, but just making an observation. We've seen the ruble recently had a massive downward move, which was the largest monthly change that we've seen since the invasion in February. So it's just kind of off the radar, but what is the market sniffing around? Is this related to energy prices collapsing, hurting the ruble? Is this related to something else, likely to happen? I don't know. I just don't like seeing that as well.
It's probably a vote on Putin.
Yeah, it's really interesting. I mean, markets are not stupid. And I don't have a lot of
only we are. Only we are sometimes. And
I'm definitely in that.
And thanks for these currency suggestions as well. Looks like you could really work some of these long term. That's not going to be a scalp. It's going to be a position type trade. So
I think
really,
so.
that's the real and the yuan, and here's the real and the yen.
It fits into this idea as well with the especially the Chinese yuan. If China starts adding liquidity again, injects liquidity through different channels that devalues the currency relative to the dollar, and you have this depreciation of the Chinese yuan relative to the Brazilian real, given the fact that you may see commodities do well as well on the back of that. So I think it's a long-term trend. It's a very interesting pair. I wouldn't be surprised if we see that playing out this next year, but I think it could be another secular change as well.
Well, I wish you a happy new year, and that 2023 is your best year ever in every way, not just in the markets, Tavi.
Well, thank you very much, Coach. I appreciate that. And for you as well, I wish you all the best for 2023. Thank you so much for having me. I love talking to you. So thanks for having me
Yeah,
again.
thank you.